Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today's Hump Day, Wednesday, March 13th. We got a few items here on the economic calendar, so let's kind of jump right into it today. We'll start with the durable goods orders for the month of January. So as you can see here, back in December, it rose 1.3%, which is a good number here. Forecast for January is actually calling for a drop in 0.1%, but it actually rose another 0.4%, which is obviously good news, especially considering that it was expecting a drop. Now, if you remove the big ticket items like transportation, durable goods orders actually dropped 0.1%, did drop by 0.1%. However, so obviously we could see the big ticket items like transportation did uh, the weight of it actually is what's kind of boosting this number here on the durable goods orders. Now, if you we got the core capital goods orders for the month of January. So in December it dropped 0.9%, but in January it rose 0.8%. This is kind of an index that kind of helps us gauge as to corporations reinvesting into their own businesses, which is obviously this is a decent sign here that they're it was not over the last couple of months, but in January they reinvested, so that's good news right there. Now we got some wholesale inflation, which is the producer price index. This is or PPI. This is a number, basically the whole inflation on the wholesale side. Now we do look at this, but it doesn't have weighted wise. It's not extreme importance or anything because what happens is even though costs may rise, sometimes inflation may rise on the wholesale side, it doesn't always get passed on to the consumer, and that's primarily what we look at. The CPI and the PCE report are the consumer inflation numbers, whereas the producer price index or PPI is on the inflation side. But we do watch it because at some point, they're going to have to pass on, the higher costs onto the consumer. As well. So as you can see here in January, it dropped 0.1%, but in February they're expected to rise 0.2%, and it only rose 0.1%. Now, kind of like the other ones we've been seeing, it is declining here. The headline number, I think, it dropped below 2%. It's like 2 to 1.9 or something on there. This dropped from like the core dropped from like 2.2 or 2.3 to 2.1 or something on there. So it's around the 2% range, and it is declining just like what we're seeing on the consumer side of things here. Last but not least, we got construction spending. So in December, we saw a drop of 0.8%. Forecasts were calling for a 0.5% increase in January, and they exceeded that by almost 3 times, but went up 1.3% in construction spending. So a decent number there overall. Stock market's up. It's so far kind of, even though it's a little mixed there, but they elected for the most part the economic data here. Brexit is kind of course, we're watching it because we're coming up to the deadline. The deadline's March 29th. They did vote against this the revised Brexit proposal that Theresa May came up with the additional concessions with the EU. However, that's not going to pan out for Parliament. It was voted down. So I'll have to kind of wait and see if they are able to come up with an agreement prior to that date, or what's going to be next for them, or are they just going to move on? Now, obviously, if they move on without an agreement, that's going to be considered like a hard divorce, and probably will disrupt the markets a bit, on domestically and even on a global level here. Last but not least, we got, of course, the Boeing story has been going on this week after the second crash in the last 6 months. The Max 737 Max 8s in many countries, from Europe to Australia to India, China, different countries, they've actually grounded those planes. So a lot of those countries are not allowing those planes to fly, and pretty much probably waiting to get more information as to what's leading to these uh, travesties that have happened over the last 6 months. So that's that's where we're at with those. So of course Boeing is basically the biggest bellwether in terms of for the Dow, and if the Boeing is doing bad, it brings down the Dow as well. The Dow is doing actually pretty well today. It's actually up over 100 points, but the last 2 days the weight is it could have been much higher, and Boeing's been kind of the one that's been keeping it lower than where it probably should have been. Let's see how this affected the mortgage-backed securities. We're only down about 3 basis points so far this morning. We were slightly higher when I was working on this. We were down 6 basis points, but yesterday we had kind of a late surge in the day. It did jump up. We were it did close up, I think, like up 19 basis points or somewhere on there. It did jump up, so we should have a little improvement in our pricing because of that late rally in the day yesterday. A lot of lenders did not give better pricing, so what they did was they'll pass it on today's pricing here as a result of that. Treasuries were down again. We were down. We were at 2.63 roughly yesterday. Today we are at 2.61 so far this morning, and that's of course with the lower yields coming in, and that's putting less pressure on mortgage-backed securities and letting mortgage-backed securities rise and bringing the rates down a bit. So that's helping us out here. So that pretty much wraps things up. If you guys want any more updates, I'll go ahead and I'll post on Twitter. Otherwise, you guys have a great rest of the day. You can find me at Mike Bjork on Twitter, and we'll see you guys tomorrow. Thanks for watching. Bye-bye.